Hello everyone, this is Jay, and in today's video I'm gonna be giving my weekly update. Yes, I know I am a day late. I usually do this on Sunday, but I had my daughter's birthday party yesterday and I had to help cooking and setting everything up for the birthday party. But I am going to be giving my weekly update, and then after that, after I give an update on my portfolio, I want to show everyone a spreadsheet that I'm working on to research stocks with some charts on it. So I definitely want to show you guys that after the update. So please stay watching and please don't forget to hit that like button. All right, let's go right into the updates tab, which is right here. All of my purchases that I made last week, they were all done on Friday, December 15. And my very first one was $25 into one of my favorite ETFs, VYM, which is a high dividend yield from Vanguard. The share price was at $111.40. This one has been running up with the market also. I think it is the wrong time for me to be bullish, but I really want to grow that position in VYM. Then my next one was SCHD, which is my regular $25 every week that I do no matter what the price is at, and I'm gonna take the same approach with VYM. The share price for SCHD was at $75.56. Then my next two were in the healthcare sector, ticker symbol PFE, Pfizer, and ticker symbol J&J, Johnson & Johnson. The share price for Pfizer was at $26.87, and for Johnson & Johnson was $154.52. I'm gonna be a little bit more bullish since the healthcare sector is down. I'll also explain in a few as to why I do that. Whenever the sector is down, I try to take advantage of it. I don't run away from it. I see a lot of times that people, when the sector goes up, they start investing in it, and I think that's that's not my strategy. I really like to purchase any stocks whenever they are on sale, which is when they are in the red. Of course, I do my research. I try to invest in good companies, so always do your research, not financial advice, guys. Then my next one was $10 into FXAIX, S&P 500 Index Fund. Share price was at $163.66. Then my next four were $5 into each one of these positions, which it was Vici, ticker symbol VICI. Share price was at $31.58. Then Kenvue, ticker symbol KVUE. Share price was at $20.86. Then O, ticker symbol O, Realty Income. I'm still buying. It's still under my cost. The share price was at $57 flat when I purchased it. And then PG, Procter & Gamble, was the only stock that was in the green, other than Vici actually, because Vici was in the green but by a little bit. But Procter & Gamble, ticker symbol PG, I put $5. Share price was at $143.26. I really want to build that position right there, and this is the closest that it has gotten into my cost per share, which I'm going to show you in a few seconds. All right, and then the total purchases was $109.67 in purchases. I wanted to put an extra $10, which it was going to be $120, but those $10 I put them towards my Roth IRA since it's almost the end, and I'm definitely not gonna max it out this year, but I am working on it, and I really want to deposit as much as I can. So I put those extra $10 there. My Roth IRA is actually all my holdings on there are in the green. I have 5 set it and forget it holdings right there. So maybe at the beginning of the year, maybe at the end of this year, I'll try to make a video on it. I do have a spreadsheet where I keep track of it. It's much smaller than this one, but I'll probably do that. Let me know in the comment section if you're interested in seeing my Roth IRA. All right, so this is my spreadsheet for my holdings in my brokerage account, in my Fidelity brokerage account. Which he has the holdings, the ticker symbols, the company names, total shares, market value, everything, cost per share. I'm gonna go to the right a little bit so we can see how I am performing. And right now my market value, it is at $10,048.65. I am in the green by $119. My performance is in the green by 1%, which is definitely awesome. I'm definitely very, very excited about that. And these are my holdings right here. SCHD is in the green. I am performing. I am good in the positive by 3.94%, which is awesome right now. I have over $2,300 invested into this ETF, and I'm going to continue buying every week. And this is just by me buying $25, $30. Sometimes I did some special deposits, but I pretty much always do $25 into this holding. Then Realty Income, I was very bullish in it, and right now I am almost in the green. I am only down by 1%, which is awesome. And the share price is at $57.29. My cost $58. I wish I could have brought it down some more, but I am okay right there. I'm happy where it's at right now. Especially it is my second largest holding, so I'm slowing down a lot. Bank of America was one that I did a lump sum, and I'm gonna explain a little bit. This is I put $800 into this position right here when the bank sector went down. That's when I did that. The share price was around $28.50 when I did that lump sum, and then I was able to drip 2 dividend payments into this company. I did turn it off right now. So that's why my cost basis is $812.97 of money invested and reinvested in there. My performance is 15% in the positive, in the green. I did purchase Bank of America with the plan of selling in like 2 years or so, or 3 years. Whenever it goes back up, whenever I get like a good return percentage. I do not believe that I'm holding Bank of America for the very, very long term, like SCHD or VYM or any of these other companies. But every time a sector goes down, I try to look for what's undervalued, for what's on sale to my strategy, and then I just start to try to get bullish in that until the sector goes back up. It always happens. That's what I have been noticing, that it always happens. Of course, I cannot predict the future. I might be wrong one time or 2 times or 3 times. I don't know. But that's really my strategy, not financial advice, guys. J&J, I am in the negative. Same with PFE, ticker symbol PFE, Pfizer, and Johnson & Johnson. So I'm going to be a little bit bullish while they are down. The healthcare sector is down, so I see it as a sales sign right now. So I like to purchase stocks that are on sale. I am down in the negative in Pfizer by 28%, which is down a lot. But I am going to continue bringing my cost per share down into the 20s. Right now, I started this position when it was around $35, and my cost per share is at $34 right now. So I'm going to continue investing in it. Johnson & Johnson, my cost per share is $160, and the price right now is at $155. So I'm going to continue buying more and more. Main Street Capital, VYM, PG, NKO for Coca-Cola, and FXAIX, they're all in the green right now, which is awesome. KO is one. Coca-Cola, I did not buy any this week. I did kind of miss it. I wanted to buy $5, but I put that towards BYM. I think I took a good advantage of it when it was around $51, $52 KO. So my cost per share right now is $57.56. So I'm definitely working on that. Then my next one that is in the red, it is MPW, but I'm not buying any shares as of right now yet. I might bring my cost per share down later on, but I'm going to hold for now. Then Apple is in the green by 33%. This is one of my best performing stocks right now. Definitely. So I'm hoping it goes back down into like at least $160 something, so I can buy some more shares, and I can make some more. I can buy some more of this Apple holding, because I really want to hold this one long term. This one is mostly for growth, not for the dividend. They pay a very, very small dividend. My yield on cost right now, as it says right here, is 0.73%, which is less than 1%. All right, Vici is my next holding. It is in the green, but I still like it, around $31. My cost per share is $30. And then SBUX, Starbucks, is at $96.75 right now. My cost is $88.68. If it goes back down close to $88, I'm definitely going to be making more purchases. But right now, I wanted to make a $5 purchase, and it was another one that I did not have any extra money for. I don't want to bring my cost up too fast, but I want to buy some more. I really want to grow this position right there. Then my last one was CanView. Prices at $20.99. I've been purchasing like $5 every week pretty much. And my cost per share right now, it is at $23.24. I am in the negative by 10%, but I'm just going to continue working on bringing my costs down on this one. And then I have $145 in cash. I was almost about to deploy it into VYM just so I can continue growing this position right here because I really want to grow it. But I've been waiting to see if maybe I can deploy it into a holding in a sector that is down right now. All right, so let's go right into the end of my spreadsheet right here. And my yield on cost, it is right here in column N. My average is 3.79% for my portfolio, which is definitely awesome. And then for the dividends, I did fix SCHD, VYM, who just announced their dividend for the fourth quarter, and FXAIX, who also announced their dividend for the fourth quarter. And I did the average for the whole year, for this year, for 2023. So I'm going to keep it at these dividend payments, which is 0.87 cents per share for VYM, 0.66 cents for SCHD, and 0.060 cents, 60 cents for FXAIX. And this is, I added everything that they paid this last year in 2023. So I'm going to keep it like this for all of 2024. So you can get me closer estimated yearly dividend. And yes, so I'm going to hold it for 2024 for all three of those. And then at the end of 2024, I'll get everything that I got paid from them in 2024, and I'll do an average for 2025. All right, so this is my portfolio, and it is in the green right now. My estimated yearly dividend in the next 12 months, if nothing changes, if they all pay the same that they paid this year, I should get around $395 in dividends for the whole year, which is awesome. I'm almost at 400. This is my next goal right there. And hopefully by the end of the year, I can definitely bring that up to $400. That would be awesome. That's definitely awesome. I really like it. I remember when it was only like $4 or $5 in a year. Definitely don't get discouraged, guys. Just continue investing. That would be my advice to you guys. Always do your research, of course. I really like the companies that I'm holding. So, but none of this is financial advice, guys. All right, so let's go right into the spreadsheet that I wanted to show you guys, which is this one right here in the stock research. And this is one that I am creating. I'm still working on it. Let me know your opinion in the comment section. Let me know if there's something that you want me to add. But right here, it is the ticker symbol, company name of it. So I use Occidental Petroleum Corp, ticker symbol OXY. I'm gonna explain to you guys the reason in a few. But this right here in column A and column B, you have the share price, which is right here. It's automatically populated. So right now it is at $58.56, the 52-week low, 52-week high, then the dividend yield that they pay right now, which is at 1.23%, the yearly dividend per share, which is 72 cents a year per share, and then the market cap is at $51 billion. And then I also have the PE, the price to earnings ratio, which it populates automatically also at 12.76. The reason why I chose this one is because Warren Buffett and Berkshire Hathaway have been buying more and more shares of this company, which they did right here in the news tab. Buffett's Berkshire buys more Occidental in endorsement of Permian Basin related purchase. And right here, some key points that it says right here. Berkshire Hathaway this week purchased more than 10 million shares of Occidental Petroleum worth $588 million. And they already had a position in here. They bought even more. This was done last week when they purchased some more. The share purchases signal that Warren Buffett has confidence in Occidental's decision to acquire Crown Rock. So they just acquired Crown Rock, or they are acquiring Crown Rock soon. So a privately held producer in the Permian Basin. Berkshire now owns a 27% stake in Occidental, worth $13.6 billion. So this is definitely a lot of money into one company. 27% stake of the company. That's definitely crazy. I just wish I had a little cut of that. And these are the ones that I use. I use revenue to put in the charts, the revenue per year, as you can see right here. Free cash flow, total debt, dividend growth, which is the dividends that they pay per share per year, and then the earnings per share that they average each year. So if we go right here, I'm gonna go right down into the first spreadsheet, because I like to use charts right here. So you can see the revenue growth right here from 2017, which it was at $13 billion, to $18 billion in 2018, then 2019, $21 billion. Then it went down in 2020. I'm sure it was because of the pandemic. I do believe the whole oil and gas sector got hit. So you're going to see that in a lot of stocks. Went down to $16 billion. Then it went back up in 2021 to $26 billion. Then 2022, $37 billion. So definitely looks like that revenue is growing. If we look at the total debt, they did take a lot of debt in 2019, which it was around $40 billion in debt. They were at $10 billion in debt in 2018, but in 2019 they acquired some more debt. But they have been paying it down, as you can see right here, year by year. In 2021, it is at $30 billion. And then in 2022, $20 billion. So they have been paying off debt. Now let's see the earnings per share, what they've been average. And in 2017, they were at $1.71 earnings per share average. Then in 2018, $5.40. Then 2019, they went in the negative by $1.22. And this was the really bad earnings per share in 2020, and negative $17.06. But now they have recovered, and I'm guessing that's what Warren Buffett has been seeing. And right now it is at $13.41 in 2020 in the positive, which is, I'm guessing, something that Warren Buffett is seeing right now. There's something that he's seeing that we are not seeing. And let's check the free cash flow, and this is it. The free cash flow was definitely growing from $1 billion to $2 billion in 2018, and then 2019 it went down in 2020 under $1 billion at $759,901 million, but then now it went back up in 2021 to $7 billion, and then in 2022 to $12 billion. So that's why I'm sure that's why they're paying off debt very, very good. You gotta see now how their free cash flow will be for 2023, which I'm sure is going to be even more. And I think that's why Warren Buffett has been investing in it. And then the dividend growth, they used to pay a nice steady dividend. They have very, very small growth, because in 2017 they were paying $3.06 a share per year to $3.10 to $3.14. And then it went down to, in 2020, to only 82 cents a share per year. And then in 2021, it really got cut to only 4 cents a share per year. But then in 2022, it went up to 52 cents a share per year. And then in 2023, which is right here, their yearly dividend is 72 cents. So they have been growing very, very little. I'm sure it is because they're focusing on the debt. But there's something that Warren Buffett is seeing into this company that we are not seeing. And not sure if it's one that you're looking into, but definitely do some more research. And please let me know your opinion in the comment section about my new spreadsheet. Let me know if there's something that you would like for me to add right here, to do some research on a company, because I would like to use this spreadsheet next year to do some research. All right, everyone. Please don't forget to hit the like button. I really appreciate everyone's support. The channel continues to grow. I'm really hoping that the channel continues to grow also. So I can definitely invest a little bit more into the channel. I'm definitely looking at laptops to be able to make videos next year and continue to invest into the channel because I really enjoy doing the videos. I really enjoy replying back to the comments. I've been very busy as of lately with work and all the activities, and I know Christmas is coming also. So I've definitely been very busy, but I like reading your comments in the comment section and replying personally. So definitely let me know your opinions in the comment section. What are you purchasing? Any of your holdings that you want to share? Anything that you want me to research? I definitely would like to use that spreadsheet a little bit more to research stocks, and hopefully I get to do a couple more videos this week. All right, everyone. So I hope you enjoyed this one, and I'll see you on the next one. Thank you. Disclaimer, I am not a financial advisor, and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.